Hey, good morning, everybody. Sorry for the little late start there. And hold on. Two. This is all right. So yesterday was a different day, meaning there wasn't the enthusiasm to buy the dip as aggressively. We saw that late in the afternoon. And it's pretty quiet here today. And I don't know. I titled YouTube there was possibly quiet before the storm. I don't know. It kind of looks like a measured move in place here already. Um, in this particular index, what that is, and I don't know why this happens. I've seen it over the years so often where you get a move like that and you get a little attempt to roll over. And I know it's not exact, and you know, you kind of equal the lines there, and I guess that would put it around 16,000 or so, and it's a big whole number. Usually, it sets up at some resistance area, which there's none here, since it's new all-time highs. But this is just one of the ways of, I guess, a guesstimate that something has possibly run its course as a move. And as we've discussed, over the course of the last 2 weeks during this move up, was what as prices begin to move up, our first reference point of support is the prior day's low. And the initial one right here, which was that resistance initial move, you look for it to, pull back a little bit, or you get a continuation pattern. And rather than do that, it had, I guess you could kind of call it a mini bull flag, since it's only a few bars. They're usually a bit longer than that. So as it went up, topping tail, no break. And I can't tell you how many times this one concept has saved myself as well as subscribers, because we use this as a last piece of confirmation for an entry. Now, not that we would want to short this since the power of the move up, but when we do get sell setups in downtrends at resistance, where we say, okay, we want a break of a prior bar's low as an entry point, and it doesn't trigger. And for whatever reason, at those moments in time, prices continue to move up. Now, what we see here, and I think I mentioned this day before yesterday, was, look at topping tail. Let's clear this up. And I've seen this over the years too, within uptrends, where it kind of relates to the saying that markets climb a wall of worry. Well, as it's climbing, traders, institutions are like, oh, that's not going to keep going, and it comes in, but it doesn't violate any support. And topping tail again, or a small topping tail again, and then it's been going up and up and up, and it closes right at the high of the day. And it's like now there's no apprehension, there's no fear. You got to get in, because the market's gonna go to the moon, and it tops out. We don't have evidence of that yet. And of course, we never do until after the fact. That's the way things are. But we've got this slowing in momentum candle there, where it dipped down and came back up. The theory of candles is like, oh, it's not one of those deadly doji bars or whatever, hangman, because it didn't, the whole bar isn't up above, leaving a gap between bars. But we just look at that as slowing momentum. Now, what happens? Do we get a red candle down? Does it go sideways? Our analysis is based on, the trend, and bar by bar analysis, and what's to the left, and relative strength and weakness, and so on, seasonality, market internals. So, we got the market internals over a week ago that said, hey, risk is growing here. We had something happen there. I've had to update stuff. Anyway, we see sentiment up here. And yesterday, I don't know why this is like that, but breadth came back up above the extreme level. So it's not like a double. It's just, things don't turn on a dime, which I explained when this happened over here. I think it was on this day that they actually reached an extreme. Right? And, we got the beginning of the turn, and, this is SPX. But we got the same slowing momentum candle. So when sentiment, this is based on what option trainers are doing, total put call ratio, gets up to this level historically, we know that the enthusiasm, right, for the move up has gotten overheated. And that relates to risk rising. And it doesn't mean crash. It just means that, hey, you want to be a little more careful, backing off on certain positions, smaller positions, and so on. Because at some point, we know markets always turn, and this is a measure of historical measure as to when breadth and sentiment has reached an extreme and prices correct a bit. So they're not correcting yet. Just momentum is slowing down. Well, it really depends on where you look, because prices have corrected a bit, but nothing of significance yet. Even, what was it? This kind of sideways price action, a new high, and it came back in again. So that's nothing that says, wow, a correction. But should it break this low, because it had the new high failure, should it break this low there, you can see it's kind of a little head and shoulders top. You're going to get more downside price action. So things don't always just stop and reverse to the downside. And we look at other markets, which nothing much is moving here this morning. It's like Sleepy Joe. Come on, let's get going. And we have same kind of situation where momentum slowed with the left, topping tail, breaks the low. And, that was last week, the craziness with the earnings reports where things, gapped up, and it was larger gap up if we look at SPY. And then remember on SPY, it gapped all the way down to the green bar and then went up. And then yesterday we had that slowing momentum candle. And this is going to be easier to break a prior bar's low because it's so close. So we shall see if that plays out. Dan talking? How's everybody knows Dan's birthday? Happy birthday, Daniel. I knew it was coming up. And by the way, for those that don't know, Dan and I were born around the same time, a few years apart, but around the same time, which is interesting. So we also have the fact at this point, while it hasn't broken a low yet, we can see that momentum has slowed down. Right? It slowed a little bit there, but kept going. And now the distance between the correction bars are closer together. We'll see if that violates the low on the weekly chart, and even over here, but on the weekly chart, it's more textbook type of thing, greater than 100% retracement, which leads us to slowing momentum or some kind of a pullback. So a lot of things here are saying, hey, be careful on the long side. Yeah, let's clear that up. Wow, yesterday, finally, it did not get up to actually make a new all-time high, to get above those tails there, but just eyeballing it, is it a new closing high? I can put it on a line chart, but maybe not. That one looks like it's a little higher, that big green bar right there. But again, finally, the end of the year. And let's see if it comes back in. It's different this time, meaning we went over this, how all the other times, this was got a bit extended and the whips back and forth and the whips back and forth, and how things tightened up here. We covered that a week or two ago, how things were tightening up and pretty bullish, wide range bar. So we cover 180s. So when we do MT Live, which we'll be doing tomorrow, we cover a slide with different candlesticks and patterns. And one of them in the middle says, whatever you call it, it's going up. So, and this is a good example of that, in that red bar down, slowing momentum, up bar, red bar down, right back up again, or bottoming tail bars. Call it whatever you want. These patterns all suggest the same thing. They're going to go up. But that in of itself is one piece of information. Going to go up to where? What's to the left? What was the preceding pattern? Was it whippy? Was it tight? And so on. That's all part of what we call MTS. YM, you see momentum slowed down, the distance between the highs here. It has not broken a low. So those that look at indicators, still, you would start to see what they call a bearish divergence. And however they measure that mathematically through whatever indicator that they use and settings and so forth, you see that it got to an extreme and now it's making a lower high. Well, if this pops up above 36, well, of course, the indicator has to go up. The way we simply look at this is just, well, what's the difference between turning points? And this isn't evident, yes, as a turning point, because it's got to break a low. But I see that little tail bar and the distance between those. I see momentum is slowing down. It doesn't mean it's going to pull back yet. But, we have, our measures, right? One is prior bars low. I can get that to stick. The other is a pivot low. And now that that's made a higher high, that's our reference of major support. Right? The low prior to a higher high. So breaking that would violate the uptrend. When you have a moment to do a quick review of SPY, sure, it's going to be the same. But we don't have the overnight trading. So you see those gaps that I mentioned where, this was the turn, started to make the turn lower. It broke a prior bars low and immediately it gapped up the next day, right? Whatever those earnings reports were. And then on Apple and Amazon, it gapped down near the low of the green bar. That's crazy. To have those two events happen day to day like that. Then it closed high, gapped up. Yesterday came back off the low, and we'll see if it breaks today's low or yesterday's low, whether that will be a break that takes it down toward this area here. Transports, we talked about how bullish that was, that it was able to recover from that lower low and then reversal there, and obviously getting closer to resistance, and 16,000. We always look at whole numbers, and while this is transports and the ETF is transports, the ETF has more stocks than this average does, so that's why it looks different. And so they're both supposed to be transports, but as I said, the other one has more stocks in it than this one does, and that's why it's that way. Now, that moved up vertically primarily because of, well, I didn't look at it yesterday, but JBHT truckers and rails began to stall yesterday, where airlines began to turn around, and some of them look like they should go up. They look pretty darn good, even though they might have a resting day today, in addition to the cruise lines. So money is transferring or rotating from what's done well into the dogs. And we'll see that the dogs maybe bring up the rear in the last few days, several days here. Crude oil, right? Stalled correcting sideways. Buyers still on a dip there. So when you see a pivot low, which we simply define as a bar with 3 higher lows to the left and right, but buyers are going to show up there again. Then you see how much they can hold it or not. Now, on the completion of today, this is going to become a pivot low. And so one pivot low is support, and 2 pivot lows is more significant support. Common sense. So if it was to violate that, we'll put a line with a little alert there, that's going to be a significant violation of support. And everything got jumbled up here over the weekend. Gold just continues to be back and forth, back and forth. It's like an Alka-Seltzer trade. This looks better. I don't know that it could actually move, but if it closes this way and turns around, it could be considered as a long. I kind of like it the way it's pulling back here at this resistance. And so we'll see if we get that as another bottoming tail bar, and that would be a nice turn. Yeah, the yields have been interesting here. I showed you that chart yesterday, how the 3-month and the 5-year against the 10-year are contracting. And so if we, looking at that, and even the difference between here's the 30-year, you can see how it's come down here. And I guess I really shouldn't say too much that it's unusual because it's a bottoming pattern. But bottoming patterns are notorious of making really powerful moves and then giving it back, and a lot of times all back. And that's how they bottom. And you can see, this wasn't that powerful, but it looked pretty good. And it came all the way back. And now we got this one. So we'll see if it actually turns around. We got the 10-year, which is obviously more of an uptrend. So we've got those longer yields that are staying relatively low. And the medium ones, this is still trending up. It's pulled back a lot. And then you've got the 5-year, which is in a much stronger uptrend. So we've got these shorter term yields that are moving up more aggressively or stronger. And the longer term that are flat to lower, the 30-year, and I forget which one of these I got on the bottom here, but you saw how it's measuring the difference between the two and how it's coming down. And while it's still far away, what we want to be concerned about or knowledgeable about is a time where these longer term ones move up above the intermediate or longer term ones, because that has been the one undeniable, reliable measure of a recession coming. So the market is tightening here, where the Fed is jawboning about it or whatever they're going to do it. The Fed is already taking care of that to some extent. So we'll see how that evolves. And I think that is about it. It's about it. Yours, Dan. I talked long enough. I thought I was going to talk for like a few minutes because nothing was going on here. I don't stop talking.
Oh, you can talk as long as you want. All right, good morning. We added a lot of put spreads yesterday. We were active. Everything looks fine. Our opens, I just see our Mara gapping up a lot. We tighten the stop on that. Right here, gapping up. Bitcoin up over 2,000. The Journal had an article today about the Fed wanting to tighten, through the Treasury, tighten oversight of stable coins. And so I have no idea, what today's gap up has to do with that. If anything, people take whatever story and then they're spin doctors. So remember, people were afraid of, oh no, government regulation of cryptos, and now they're spinning it as, no, that's a good thing that they're regulating it. So yeah, thanks guys. Yep, Chug is wrecked. I actually have there's a lot of earnings, and there's actually a lot of good setups, believe it or not. I went through and cut out a bunch of them already. But yeah, Chug's getting whacked. I don't know what to do with it. I had car here, bottom right. Look at this, gapping up to 184 this morning. I was looking at that as a gap and crap. Things that run like this into earnings and then gap up. I just 9 out of 10 times have a bearish bias. Yeah, Jay, it's right here. ANET I have in the middle. This is my definite gap and crap candidate. So I got it right there. Yep, Clorox is on the list. That's a nice bottoming pattern. Yep, I'm gonna get rid of car now. Well, but now the gap's too big. Look where it's gapping to. Remember, tier ones, I want a bullish gap with a price void. So that's definitely not a tier one. Greg was answering an email, somebody wanting to do an Alta call spread. And Greg, I thought I looked at this pattern over the weekend, and even in fact yesterday in the room, I said, this is a pattern you could trade up or down. It's bearish consolidation, but if it now breaks through these 10 bars, it looks like a put spread. But as of now, it looks like a call spread. Let's keep an eye on that.
Well, I mean, he already put it on, I assume. But what was interesting, then he said, I took your swing trading course. It's great. And now he's showing me a credit spread trade. I'm like, all right. I mean, everybody uses that same analysis for credit spreads, but wasn't doing a swing trade.
Right. So I think that's the rationale, because we start with the charts. Billy Bob. Bearish gap. This looks like an ADR. So I'm going to just get rid of you. VRNS, I can't tell where you're gapping. SBAC, also it's a sloppy buy setup. We'll come back. HLIT 1030. Bullish weekly. Crest gap breakout. I don't know why I'm not seeing these prints pre-market. But this could be a great put spread. There's our ANET, SKT. Now the daily looks like a mess, but look at the weekly and monthly. Look at all that support. If people say charts don't work, you got 2 months of weekly bars here where that's an agreed supply and demand. Let's keep an eye on that. Sell a put. 156 SPG Simon Property. So these are the malls. Look at that. Well, it's not all-time highs, but it's surely multi-month highs. I guess people going back to the malls. Oh, thanks, PD Duck. Stavros. Thanks. Oliver, Tesla. Yep, Tesla's on the list. Yep. Yeah, do you remember yesterday I said I was hoping this would gap up $50? Then we would do that's called a gap and crab. But when you get things extended like this with big wide bars, then wherever it opens, this is a pattern that's strong as can be, all-time highs. There's ultra enthusiasm in this picture. And whether it gaps up a lot, down, flat, takes out a 30-minute low, then I'm looking to fade this thing. You just got to wait for your setup. So yeah, definitely this is on our watch list to day trade short or call spread. No, thanks, Emmanuel. SKT is a Wall Street bets that I do not know. how I tell is to see, if you get any jolts like this. So yeah, in March, it definitely could have been one. PSA, bullish, daily, weekly, monthly. NSP all-time highs. JR affirm, bear call weekly. It is extended weekly. Somebody asked me about this yesterday, I think, and I don't like the call spreads. It's still in an uptrend with rising 2050. I need a little bit more unless it's just short term. I liked Home Depot a lot better because it was more vertical, got two topping tails, and I got no support here. Whereas a firm, it's grinding, so it has more support. T-Doc, I love bearish gaps negated. Look at the weekly, monthly. So this is on my watch list, but it has a big price void, so we got to be careful. Argin, we entered yesterday, and that's up alarm. I'm going to go ahead and move the stop here just to protect our nice gains. 348. Kroger up alarm.